Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. And the first chart I'd like to look at is the euro against the dollar. Now, a key piece of action yesterday, just as the market was starting to get to grip with the idea that the action over the last 3 weeks may indeed be a double top, yesterday we had a superb looking key reversal up with a follow-on higher today, obviously. The market had earlier dipped down to take a long, hard look at the neckline area in a 117 even area before saying no and moving back up. Today, the market has moved higher still. Over the broken 2011 today downtrend, currently at 118.18, had capped yesterday's action and settling right now just under that broken trend line and under the important June 2018 high at 118.51. Now, this does not mean that the idea of a double top is over. No, indeed. It, however, does mean that it is put on hold for now at least. The next chart to look at is cable, aka sterling against the US dollar. A second bearish black crow yesterday and a suitable follow-on lower to the previous session's bearish dark cloud cover pattern. The market continues to be capped by the March high at 131.99 and the key 50-cent Fibonacci line for the whole of the 2016 move at 132.33, possibly now for a third time. Hence, we may have a ragged double stroke triple top pattern going on here for the last 3 weeks as prices have seemingly failed yet again to breach that March high. Below, we still have the weak looking but surprisingly sturdy broken upper channel line from the April to June mildly bullish channel. That's currently at 129.93. Interestingly, we could look at this as a proxy for a neckline if we indeed view the third top as the right shoulder of a mini head and shoulders top. If that is the case, then an initial target X would be in the 128.75 area for a pullback up to the neckline and then perhaps a drop down to the full potential target X1 in the 127.50 area. This is by no means a done deal, but an interesting concept that may play out. Today, we've contrad the last 2 days' action and moved back up away from the supposed neckline so far. The next chart to look at is euro against sterling. A second bullish white soldier yesterday and a suitable follow-on to the previous session's bullish thrusting pattern. It also has given us the potential for a possible weekly key reversal for this week. If we can get above 90.60 between now and Friday's close in New York and then either close over 90.35 or under 89.90 that same Friday night, then we'd be on. Meanwhile, yesterday's action punched back up and closed over the combination of the short stroke medium moving average at 90.45 and the broken lower time currently at 90.17 of the June to July bullish shift pitchfork. The market was capped once again, like last week and even today, by the short moving average currently at 90.45. That's the one to watch in the immediate future. The next chart to look at is US dollar against the Indian rupee. A combined bullish double and opening white Mariposa yesterday. It was much like we saw 3 weeks ago when we were down at the same levels. And interestingly, that also happened on a Tuesday and a Wednesday. Today we're higher-ish. We're hanging around the short moving average, currently at 74.84, and the lesser Fibonacci line at 74.91. I've mentioned before that one maybe ought not to look at these two as resistances, but as attractors for the market. The term seems to currently fit. Looking outwards, we have some pretty solid resistance from the short stroke medium moving average overhead, currently at 75.24, whilst entering from below, we have a largely untested 2020 uptrend, currently at 74.40. The last chart to look at is the US dollar against the Brazilian real. A counter yesterday to the previous session's bearishness, an immediate countering bullish harami and opening white Mariposa. However, the impact of the counter appears moot as all that was achieved was a close back up over the very recent 50-cent Fibonacci line at 539.29. We were higher than this 2 days ago, though admittedly we did make a new high that had not been seen since late June. We seem to be moving up and away each day from the medium moving average, currently at 535, and all the issues that surround it there, though we also still have the overhead resistance at 550 area. Well, that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.